Now let us have a look at the bearish patterns, the shooting star and the bearish engulfing patterns. So the analysis that we applied for the hammer and the bearish engulfing pattern, we'll try to apply that here. So it's a single candle bearish pattern. So you can see that the hammer is flipped around. So that becomes a shooting star because it looks like a shooting star. It's an inverse of a hammer. The color of the body does not matter, so this can be white or black. Must come after an uptrend. Remember, in the hammer it was a bullish pattern, so it had to come after a downtrend. The shooting star is a bearish pattern, so it has to come after an uptrend. Long upper shadow must be at least twice the height of the real body. So this upper shadow must be at least twice the height of this length should be at least twice the height of this length, the body length. Okay, works better compared to a hammer. What does this mean? See, if you have the hammer and if you have the shooting star and you have to compare the bullishness of a hammer with the bearishness of a shooting star, the shooting star wins because the shooting star is more powerful candle pattern than the hammer when it comes to forecasting uh, reversals. So when you see a shooting star, the probability is more that the price will come down than when you see a hammer and the probability of the market going up. Okay, so the shooting star is a more probable candlestick pattern relative to the hammer. The high of the pattern becomes resistance. So this pattern, this is where the bears come into the market. So this becomes our resistance, just as the low of the hammer becomes support. Resistance is usually tested less frequently. As I mentioned, the shooting star is more powerful than the hammer, although they have different roles to play. But when it comes to forecasting future prices, the shooting star does a better job than the hammer because it's easy for the market to fall than to go up. Okay, so the resistance is usually tested less frequently. The chances are less that the shooting star stop loss will get hit. Our stop loss will be above the high of the shooting star. So imagine if this were a standalone shooting star which is not confirming any prior resistance. I would still be comfortable taking that I would still be comfortable taking that trade because the resistance is usually tested less frequently. The real body must be as small as possible and the lower shadow must be as small as possible. All the conditions for the hammer just in reverse. Okay, so the real body must be as small as possible, the lower shadow must be as small as possible because the lower shadow represents bullishness and this is a bearish pattern. So we want the upper shadow to be long and the lower shadow to be as small as possible. Okay, so let's quickly have a look at an example. So this is an intraday chart. This is 15 minutes chart of SBI Bank. So the market is going up. Remember, the shooting star should come after a uptrend. So the market is going up. So this is the shooting star. It comes after an uptrend. The upper shadow is more than twice the height of the real body. Then if you had to take a short position here, let's say I go short here, I keep my stop loss here, so that's my risk and I would expect the prices to go down. So that would be our support area because that's where the bulls are sitting. They pushed the prices up from here. So let's call it S1, this let's call it R1, this is our resistance and probably this is where the price went up. So let's call it S2. So that's our reward. I think it is 2:1 up until S1 if we have to measure it. If it is 2:1, I would take that trade. If it is not 2:1, I would probably not take that trade. And if we look at this, then it's even more than 3:1 maybe. And this shooting star is confirming the resistance created by this candle. So this is where the price has gone down. So the shooting star is confirming prior resistance, that is even more powerful sign. So the shooting star itself is become resistance. So if you see here, this candle and these two candles, they have not been able to break that resistance. This candle has been able to cross that resistance but not been able to close above the resistance. So this chart goes to show how powerful the shooting star resistance is, and it has held as resistance for a very long time. Although our stop loss would have been hit by this candle, but that's fine. That is the reason why we keep a stop loss, so that we can cut our losses. Okay. So usually the chances are less that such kind of things will happen, because shooting star is a very powerful candlestick pattern, bearish candlestick pattern, especially if it is confirming prior established resistance area. Okay.